Hedal Dalal of IIAS. So,
okay, all right. So let's move on then. We have Raj Mehta, the fund manager at PPFAS Mutual Fund, who joins us on the show. Hi, Raj. Good afternoon and good to see you, and thanks for waiting by. Well, Raj, I was looking at your portfolio construct, and you have played this theme in terms of stock exchanges, financialization theme, and the entire equity cult, so to say, because you have CDSL in there, you have IEX, you have MCX as well. How much of this has played out, because some of these stocks have re-rated big time. It appears there's a full reset in PE and its valuations as well. What's your take?
Sure. So as you said, the financialization of savings theme has just started in India, and there is a long way to go from here on as well. So from the time we have bought, surely the valuations have moved up. But sometimes you just need to hold on, have patience, even if the valuations have gone up, because it's not easy to exit and re-enter these stocks. So we have been holding on to them. And apart from the stocks that you mentioned, we also hold a stockbroker in there. We also hold a AMC. So trying to play it out through different routes and having diversification within the theme as well.
Got it. But, Raj, you all bought in early. And as you said, obviously good times for you as well as for the fund. But you won't add at these levels.
No, we haven't been adding to it for a long time now. So, in fact, most of the companies, we are at our limits, regulatory limits, which is about 5% shareholding. So, most of these depositories and stock exchanges have regulations where you cannot own more than 5% in these companies. So, I think for most of them, we are at about 5% in the company.
MCX is up 30% this month. It's up. Today it is up. It's got to the triple-digit gain mark, 100%.
Yeah,
100.95%. The big story with MCX, of course, is the not so recently but fairly recently introduced options on commodities, and even within options, the story which has not been kind of discussed too much is the fact that with about 15 months behind with options being introduced in commodities. Volumes traded, daily volumes traded have now reached, average daily turnover has reached about 1 lakh crores. And of course, the bet is that, like what we've seen in equities, options now constitute about 90-95% of the total F&O segment. Futures is very small, and something similar will play out here as well. So that's the bet that many are making with MCX. Raj, am I correct in the ballpark broadly with MCX? Would you like to explain?
Yeah, sure. So options is one of the triggers for this stock in the last 6 months. A couple of other triggers are that there has been volatility in crude and other commodities as well, which sometimes helps grow volumes for these exchanges. And the third being the technology platform shift that they have made. So this had been in the news for a good couple of years, and it got delayed for some or the other reason. So now they have moved from a variable cost model with 63 moons to a fixed cost model with TCS. So what this does is, once the volume grows and the revenues grow, the technology costs would not grow in tandem with that, and that would bring some sort of operating leverage for the company and help increase margins.
Okay, so that explains the interest in a lot of these market infrastructure institutions, the exchanges, the depositories, etc. Rajai, good afternoon. I was noticing, cash levels from September have gone down by, I think, just about 1% or so, just around ballpark. Though I didn't notice any major changes in your top holdings, the top 10 or 15 stocks. They remain pretty much the same. Anything different, anything new that you've bought, or is it just adding incremental weights in your current positions?
We haven't added any new company. It's been more of additions to the existing stocks. Also, partly the cash would have reduced because the markets have gone up. So as a percentage, the cash comes down. But absolute levels, I would say more or less we have been sitting at about 15% cash for more than 12 months now.
Okay, so tell us the thought process. We're close to 20,000. You've not been adding anything new in the last couple of months. What's the reason? Is it valuation, or is it that the themes that interest you are already looking too expensive, or are you just being a little cautious and sticking to the current holdings?
So our position has always been that we don't hold on to cash just because the markets are at an all-time high, or the valuations look high. It's more of a bottoms-up stock picking philosophy that we have, and as and when we find attractive opportunities, we are fine with deploying. So, say tomorrow, if we find a good company, 5% of this cash will go away, and the cash will come down from 15% to 10%. So, always looking for attractive opportunities. As and when we find one, we'll deploy it. If not, then willing to sit on cash as well for a longer period of time.
You know, Raj, I was looking at Animal, which releases later this week, and I believe the collections are quite good, you know, the pre-booking that we've heard about. But the lead up to that question is, what about Ritik, the H of the Ritik, HDFC Bank? It doesn't seem to be doing that move, you know, that everyone's been waiting for. Do you think 2024 is the year when, in fact, you know, some of these large private sector banks that actually haven't performed, they come and they perform? It won't only be good for them or for their shareholders, but it'll be good for the index, because there's a large part of the index that's underperforming. HDFC Bank, your take?
That's correct, Nigel. So HDFC Bank has not performed for the past 3 years since COVID. We have seen relatively it has underperformed the markets, and at the same time, other private sector banks as well. But if you look at the fundamentals, we have seen improving fundamentals for all these top private sector banks, be it NIMs, credit costs, or in fact credit growth as well. The longer term trend of market share shifting away from PSU banks to private banks continues to go on, and it will continue in the future as well. So I think private sector banks is a top bet right now, and it's a top sector in our portfolio as well, and we are very positive on this.
Raj, you'll add HDFC Bank at these levels?
Yes, we have been adding almost every month. We have been adding to HDFC Bank.
Okay, hopefully Ritik dances then finally, you know, for good of your portfolio, good of the shareholders, and good of the index as well. Always good speaking to you, Raj. Thanks so much for joining and discussing, you know, all those themes with us and a couple of your portfolio bets as well. For the time being, you know, we'll slip in a short break, but I think before that, just pull up the Nifty Bank and the Nifty Financial Services Index. When we're having that chat with Raj, we have the Nifty Financial Services Index where the expiry will play out, and I think that saw a bit of a drop in the last few minutes. The Nifty Financial Services Index could come up for you. That's the Nifty Bank. I think the Financial Services Index had a bit of an intraday dip that got bought into, so that comes out to you. In fact, now that dip that got, you know, that we saw has got bought into, so that's moving up yet again. Well, time to slip in a short break. On the other side, Nimesh is waiting for us. He's going to tell us what he's picking up in terms of D-Street action.